The recent development of the Red Sea crisis does not suggest it is going to resolve anytime soon. So which are the markets that are already started moving and how far will they rise this time? And we will do a recap of the supply chain crisis during the pandemic and also study into the current supply chain disruption because of the Middle East conflict leading to the Red Sea crisis. My name is Kon Hao. My work in this channel, as always, is to study behavior science in finance, discover correlations between different markets, and uncover potential opportunities. And before we get into this subject, please do take some time to read into the disclaimer. Now let's do a recap what happened to this supply chain disruption during the pandemic. It all started at the beginning of 2020. And of course, at the point in time, the global have experienced a lockdown and it caused the supply chain disruption. But it is always there's this delay effect. It is only 1 year later, the inflation started to pick up. And when did the inflation start to cross above 2%, hitting 4%, above 2% for the first time? It was during April 2021, more than a year. And of course, the rest were history, as we could see that the inflation continued to climb all the way to 9%, and this was the June 2022 numbers. And let's look at what happened to the Red Sea. And the current Red Sea crisis started in November, and it has caused some disruption in the supply chain. Now let's look at this map here. And how important is this Red Sea leading to this Suez Canal shipping route? It represents a large fraction of the global trade, as we could see here. Each year passing through this Red Sea to the Suez Canal from the Asia market, the export to the European market, it represents a fraction, 15% of the global shipping, 30% of the container traffic, 8% of the grain shipments, 12% of the oil, and 8% of natural gas. So it all started with the Houthis that seized certain vessels in November 2023. And they confirmed that they will continue to do so until certain conditions are met. So what happened here is that many logistic companies now send their ships around the Cape of Hope, which is approximately 3,500 nautical miles longer. And that's adding 7 days to 18 days to a ship journey, thereby increasing the complexity of the global shipping system. And according to the International Maritime Organization, some 18 leading shipping companies have decided to reroute their ship across South Africa, which is the export from the Asia to Red Sea, Suez Canal to Europe. It was this short path, but now all the shipping companies are going around the whole of Africa while reaching to the European market. And just by adding 1 or 2 weeks of travel time, the fee for each vessel, depending on its size, may cost up to several hundreds of thousands. And some even say the large vessel may cost up to 1 million US dollars. And the volume of the shipping container passing through the Suez fell drastically from 500,000 per day in November 2023, and within a month, it fell to 200,000 per day in December 2023. So how is this supply chain disruption trigger the market? With the increase in shipping costs, as we've discussed, and with a longer waiting time for you to receive your goods, expect the commodities prices to be higher and likely inflation to pick up. And remember that when a crisis happens, there's always a delay effect for the inflation to come shortly. And what we're seeing here is that the whole crisis started in November, and we saw that the December, the natural gas is start to move up. And it may seem like a small movement here, but what we're looking at here is at around $2 to coming close to 350, and this little move, it signals a 50% rally. Now let's study a little bit more intimately across all these commodities, starting somewhere in November and December last year to current. And gold is always a benchmark, and I always say that gold is the leader of all commodities. So as long as gold remains firm, I believe the rest of the commodities, given their time and season, will ultimately follow the gold. It has to have certain trigger. It could be fundamental, it could be technical. I do not know. But what we're seeing in the gold is since November around here, it has moved up. That's for the gold market. And crude oil, since the December period, it has stayed firm, as we could see that crude oil has been coming down, but because of the Red Sea crisis that we're experiencing here, the oil kind of stabilized. And so this is the natural gas. We'll talk about it later on. Let's look at the Globex palm oil here. It was kind of stabilized. As you can see that there was January. This year it started to move up. And something is moving. And let me just move over to the daily chart here. And what we're seeing here is that the soybean, the oil, and the mills, I'm seeing something interesting here is that over the past few days, can you see that there was a pivot here? Maybe it's signaling that it is reaching a low pretty soon, a trough, and we could see a hammer, and we could see a very classic hammer here as well. And what we're seeing here is that the inflation, this is the US CPI numbers, it has kind of stabilized from a peak of 9% in June 2022 to the trough about 3.1%, but now it seems to be picking up again. Now let's look at the natural gas, where it caused me to create this topic because of the movement of natural gas since November, December, it have moved up by more than 50%. So the trigger is already there. And let me just go on doing this, my classic downtrend line. And what I study here is that I'm going to connect at least 3 significant peaks. And this is usually how I identify a downtrend line. And this was a classic downtrend line, I would say. And it has broken above, but the market has been kind of wavered in and out. And it needed a trigger, which I felt they have broken above this downtrend line. It just needed a trigger. And it could be because of the Red Sea crisis, it is starting to move. And could be the rest may follow subsequently. So whether you're an assets manager or retail investor, there's no way we can plan for any specific outcome. The best strategy is to be aware of what is happening and be ready to roll into or hedge with commodities when situations do not turn out the way we all hope to see. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon to find out more. The market are always telling us their next move. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.